People are talking about 5,000 for gold, or I mean, some even more than that.
Mhm.
But I think realistically, it's not really likely. I don't think, even with the dollar moving down so much, certainly from the proportions here, I think anything over 2,800 would be an excessive move for gold. Now we've got targets on silver at about $60-65. I mean, if gold gets to 2,800, let's say we get down to 50 as an interim target during that phase, that means silver will go to $56. That's about right, basis our independent measurements of the pattern. I guess that says silver gets to $56 minimum.
Amid escalating geopolitical tensions, the prices of gold and silver have experienced a notable surge. Gold, in particular, achieved a fresh weekly high, surpassing the $2,050 mark. This bullish momentum was fueled by heightened global tensions and declining US Treasury bond yields, spurred by soft producer inflation data from the US. Despite the initial rally, challenges emerged as buyers needed help to breach the confluence of the 50 and 200-day moving averages. As a result, a pullback became possible. The silver is trading at $23.15, reflecting a 1.85% increase. Renowned analyst Peter Goodburn, associated with Elliot Wave International, shares an optimistic outlook for gold. In an interview, Goodburn suggested a target of $2,800 for gold and a corresponding estimate of $56 for silver if gold attains this level. Goodburn's perspective aligns with the sentiment of many expert analysts anticipating a rise in gold rates. The precious metal is predicted to surpass its historical peak, potentially reaching over $2,300 in early 2024. FX Empire's silver price. Forecast for 2024 adds to this positive outlook, proposing that rate cuts may drive silver prices toward the $30 mark. Goodburn introduces an exciting perspective, indicating that silver might outperform gold, as suggested by the gold-silver ratio. Analyzing potential scenarios for silver, if silver breaks above the 200-day exponential moving average, it could pave the way toward the 50-day EMA, followed by critical levels at $24 and eventually $26. Recent joint actions by the United States and the United Kingdom against the Houthi movement in the Red Sea have influenced investor sentiment. In the aftermath of these geopolitical developments, precious metal prices, including gold and silver, experienced a notable increase as investors sought commodities as a safety net. Before you watch Peter Goodburn's interview, subscribe to our channel and give this video a big thumbs up.
The gold price is, I mean, we can look at this from different ways, but I think that ultimately, let's have a look at gold here. This is back here. This is the last time that gold hit bottom. This is cycle wave 4 within its uptrend, long-term uptrend, moving up in a development of 5 waves. And we've got a target here about 2,800. People are talking about 5,000 for gold, or I mean, some even more than that. I don't think, even with the dollar moving down so much, certainly from the proportions here, I think anything over 2,800 would be an excessive move for gold. We've done a lot of ratio relationships, and we're working on some now because actually we're in the middle of doing the analysis for our annual commodity report, which we hope to be releasing in a couple of weeks' time. So if anybody wants information on that, let me know, and we'll tell you how to get access to that report. But we're going to show some very long-term charts on gold and the way it works with some of the ratios with platinum and palladium and even silver. The gold-silver ratio suggests that silver is going to be a big outperformer than gold. And if we take a look at that ratio, this is the gold-silver ratio. We've had a huge devaluation of silver into the pandemic. It was 126.26. That means it took 126 ounces of silver to buy 1 ounce of gold. So we've got gold divided by silver for this ratio. But since then, we've seen silver outperform gold. So we came down in 5 price swings here. We've had 3 price swings up. And the trend is downwards for the next couple of years. So basically, with the ratio narrowing again, that means that silver is going to be a big outperformer than gold. Now, we've got targets on silver at about $65. I mean, if gold gets to 2,800, let's say we get down to 50 as an interim target during that phase, that means silver will go to $56. That's about right, basis our independent measurements of the pattern. It gets that says silver gets to $56 minimum. I don't know whether it will reach 40.42, which is the ultimate downside target in that time span. It's one thing I'm not sure about. But if we did go to 40, that would mean even higher levels for silver, of course. So I think on a conservative basis, silver, you should be planning $55, $60 over the long term. And I think platinum looks really great. I really like platinum. And I'm actually building very big positions at the moment for some of our institutional clients. This is a great effective way of not being leveraged, really, to protect yourself from the dollar declines. And precious metals have bottomed already. If you're not leveraged, it's a great way to maintain your long positioning. And you don't need to worry about timing too much because these will go hand in hand. These movements up will go hand in hand with dollar declines. And I think that will serve its purpose. It's much better to do it this way. And of course, we're talking about a dollar devaluation over the very long term of something like 50%, which is a lot. But, if you consider this gain, if we go from 31.12, where are we today? 9.42. You're talking about that's that's a 60. No, that can't be right. Let me do it again. 31.12, 9.42. Yeah, it's a gain of 230%.
Newmont Corporation closed at $40.23 in the latest trading session, and all eyes are on its upcoming earnings disclosure. Analysts project the company's earnings per share to be $0.58, indicating a substantial 31.82% increase from last year's quarter. According to analyst Peter Goodburn, who mentions Newmont Mining, the current value of around $40 is expected to reach a target of $250. This optimistic projection implies a continued outperformance of gold miners in the current market phase. In the last month, the gold miners' shares have shown a 3.22% increase, not keeping up with the basic materials sector's gain of 5.33% and outstripping the S&P 500's gain of 2.9%. Goodburn points to a historical trend observed in the late 2015 to 2016 timeframe, where gold mines significantly outperformed the price of gold itself. This historical pattern suggests specific phases where gold mining stocks tend to outperform. Let's get back to the interview.
Gold miners outperformed to the upside when we bottomed in late 2015, 2016. And, I think gold went up something like 20-30%. And we saw, well over 100% up in the gold miners. So they should outperform generally. They've done a lot already, whereas in retrospect, gold bullion hasn't, it's been obviously locked in a 2-year sideways trend prior to now. But if we take a look at something like Newmont Mining as an example of its larger degree uptrend, we're going to see some very big, strong multiples here. So we're currently today around 39.40, let's say 40, and we're going up to 250 as a target. So the miners, again, should really outperform during that phase. I think the miners are good because ultimately, you're going to be benefiting from the fact that you're getting obviously much bigger leverage than the underlying bullion. The only thing is now here is that again, you're trading paper currency. You're basically you've got some, to say a certain extent, you've got some exposure of counterparty risk, and I don't say that aimlessly because there's always counterparty risk with a broker. Even the big ones can go financially insolvent. The nice thing about buying precious metals is that you can basically, it's a store of value. So you can buy it physically. The average person can buy that physically and hold it without having to do rollovers or whatever. But nevertheless, I think if you're prepared to take that risk, counterparty risk, it's no problem for you to be able to buy into the miners themselves. I think there's, the precious metal miners look pretty good. Even things like platinum and palladium, you can buy the ETFs. If you're not worried about counterparty risk, then you can buy the ETFs. I think palladium, there's one which is PALL. which is a good vehicle, and platinum too. So I think platinum is PLA if I remember correctly. So check those out, because they can be good plays on the underlying, but I think the miners themselves look pretty good generally.
Mhm.
I like them a lot.
Experts predict that the prices of gold and silver will go up again in 2024. This expected increase follows the new record highs seen last year. The reasons behind this anticipated rise include Western central banks reducing interest rates, emerging market central banks continuing to buy large amounts of gold and silver, and the ongoing geopolitical tensions that could potentially escalate into severe conflicts between major countries. What are your price targets? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. We aim to reach 5,000 subscribers as soon as possible, and your support could make a big difference. Thank you for being a part of our community.